Hi, Addsure followers. Welcome to our explainer about the importance of the annual general meeting with insurance in mind. I'm Candice Persson of the Addsure team, and I'm so excited to chat to you today. The AGM is most likely the most important time of the year for a scheme. It's a chance for all stakeholders to come together and really discuss the latest goings on in the scheme and what the plans are going forward. I know that managing agents are hectic every day, but there are times of the year where it's just simply AGM season and it's a rush to no end. But let's not forget how important the meeting is and how much preparation you actually need to put into it. It's a chance for the trustees to report back to the members. It's a chance for important decisions to be made that need to be made by the members. It is vital for all members to actually participate, and we can't reiterate that anymore. But as trustees, it's your chance to offload, in a sense, and move many onerous decisions onto the members' responsibility. Your insurance aspect for the scheme is just one of the many important decisions that are made collectively by the members. Your risk of not reporting back to the members is then eradicated by hosting your AGM. Here is a basic agenda page that you most likely are so used to seeing. It's directly out of the Sectional Title Scheme Management Act, which outlines all of the important items that the body corporate actually should be dealing with at the annual general meeting. Along the years, Addsure have also published tips for the chairperson to use at the general meeting, sort of a script that helps you navigate your way around the insurance matters. And we're only going to concentrate on those in today's explainer. So, keeping insurance in mind, one of the aspects is that you will be approving your schedule of replacement values, or SRV, that we commonly refer to. And you'll also know we've had quite a few explainers on the SRV and the importance of it. It's useful to, at the start, note to your members when your last property valuation was done and when is it due again. Your SRV is directly based on the figures provided and any inflation that needs to be allowed for in your SRV. Use this as an opportunity to explain to the body corporate members what the body corporate insurance covers versus what an owner needs to seek cover for. Keeping it very brief, you want to outline what is the body corporate responsible for, what is the owner responsibility, such as insuring their personal belongings. Allow your members the opportunity to understand their section sum insured. They've had a couple of days to digest it because your SRV would have been included in your invitation pack. And you also want to take this opportunity to encourage the members that if any of them did any enhancements to their section, that they should ideally seek some guidance on whether or not they should insure those upgrades. Let them know it's worthwhile itemizing and ensuring property upgrades that they've done. And it's a very minimal cost, which would be for their accounts. This item on the agenda allows your members to approve the values that are being insured for the scheme, and you can transfer accountability. And once this takes place, the members are party to the collective decision around the replacement values. The next item that we deal with in terms of insurance at your AGM is the discussion of liability. It's vitally important as it helps cover owners collectively against risk of liability. We need to remember that each member is a part of the body corporate. Each owner is a member of the body corporate. Liability claims come against the body corporate, which is each member. You want to note what your policy caters for in respect of liability. You also want to ask the members of the meeting if they agree with the amount. Remember, the members now take the decision upon themselves, and you as trustees again have offloaded in a sense. The next item that we deal with is the discussion of fidelity. It's one of those nasty, ugly truths. Fidelity is another vital aspect of compliance as well. You need to insure your scheme against any possible fraud, dishonesty, or misappropriation of the scheme funds. There is a set formula that should be used when calculating this amount. If you need any assistance in this regard prior to you sending out your invitation pack, feel free to chat to us as your broker. We're there to help and guide you as far as possible. Again, in this situation, you are reporting back to the members about the Fidelity guarantee cover that you've got in place, and you can obtain their approval on whether or not this amount should be up or adjusted upwards or adjusted downwards. You are offloading again. Discussing any additional cover is also an important element to table at the meeting, especially now when many schemes are implementing additional measures that might need to have insurance linked to them to navigate your way around the current environment that schemes face. You also want to make mention that the trustees have consulted with an authorized and independent financial advisor about the cover that the scheme has undertaken. You also want to note that you have got written record. Remember, you should be receiving a comprehensive letter of advice prior to the renewal that outlines all the items that were dealt with in the renewal. If you are not getting this advice, make sure that you do and urgently receive this advice before the AGM to safeguard all the role players involved. So the AGM is an opportunity to report back, to engage with your members and work out the collective plan on how your scheme is going to move forward. It's an opportunity for the trustees to share responsibility and allow for collective decisions to be made. Make sure you do not neglect the insurance aspect of this meeting. So that's it for this explainer, and thank you for your time, and we will see you again. Bye.